Hello folks, today we're gonna talk about concepts of power of 3, premium and discount, and equilibrium, and how you can apply them in your trading. So we will start with the simplest one, is simply premium and discount. So when price forms a range, an expansion leg in price, we can split it in half. Everything that's below is discount. Everything that's above is premium. If you're selling, you're always willing to sell in premium prices. And the opposite if you're long. If you're bullish, you always want to buy in discount. It requires a lot of patience, but it will allow you to endure less drawdown and will simply make your trades with higher risk to reward. This also can be divided in quadrants. The logic stays the same, and with the same concept there is also a quick entry method called optimal trade entry. This is not something just mega algorithmic secret technique, but it's very simple to trade, and we will go over some examples of it. It requires liquidity sweep, market structure shift, and retracement, and at least 0.62 level, but I prefer to enter at 7.05. Now I'm gonna talk about concept called power of 3, simply accumulation, manipulation, distribution. So price accumulates initially around London session. Then it does this small manipulation, that's not main manipulation. It drops down and then it distributes up. Usually the timestamps of this is pre-market and London session. This is opening range, so from 9:30 till 10 o'clock, and then the rest of the morning session is trading up. This is the most perfect scenario. We will look at example of that on Nasdaq in a further point of the video. So there is a little bit of additional information about it. Usually it will look something like that. The manipulation will take out a low, and that low will reside around 2 and 1.5 standard deviation level. Just it's a drawing, so it doesn't fit here, but usually you wanna look for 1.5 to 2 standard deviation level. By the way, how to get these standard deviation levels, you can copy them here, and in the next lesson or lessons I will explain what standard deviation is at all and how to use it and apply it in your trading. Okay, that's basically it. Now it's gonna be much easier to explain all of that by looking at actual real examples, so let's get into them. This is very obvious example. As you can see, we initially had accumulation, then first small manipulation from it, then main manipulation lower, we took out some low, and then we displaced higher. The same thing here. First we had accumulation. It's not so clean as here, but still you can see that candles are relatively smaller than these ones, and price was stagnant around here. We took out a low, tapped the zone, and then moved up. The same thing here, we accumulated, then we had first manipulation, then main manipulation. We took out these equal lows. From previous lessons you've learned that equal lows are very important points that have a lot of liquidity. Smooth edges are gonna be jagged, as you can see. These lows are very smooth, they're in alignment to each other very close, so it's very obvious drawn liquidity. It got taken, and then we moved up. We didn't tap this CSS candlestick structure zone. What is candlestick structure? We're gonna learn in the next lessons. This is very important topic that I haven't covered yet. Here also you can see we accumulated, manipulated lower, then distributed higher, but the distribution wasn't as aggressive as I wanted it to see. Now I'm on lower time frame. As you can see, we accumulated around here. Also, I forgot to teach time aspects of trading, and that's gonna be covered with candlestick structure in the next lesson. Because this would have helped you to identify this consolidation, because before we had also this price action. So we dropped down, almost took out that low, but first initial zone didn't get 100% mitigation or sweep of its low. So we had small manipulation initially at 9:30, drop down, and almost at 10 o'clock we distributed higher. Also inside of all of that we had another power of 3 formation, accumulation, we manipulated, tapped this very obvious zone, moved higher. This happens almost all over the place, but you shouldn't treat it like pattern, because as you can see around here it could have tricked you. But here it worked very well. Obvious accumulation, manipulation, very aggressive. This is very good sign, because obviously if you want to trick people into selling, you need to move price very fast low to the downside. So as you can see, this manipulation was very aggressive, and then we distributed but very slowly to the upside. Here is another example. We accumulated, manipulated to the upside, distributed lower, but this was like primary manipulation. The secondary and the main one was here. Here we created a flip, and you could have participated in this price action around here. As you can see, bodies were respecting the zone. Yeah, they got lower a couple times, but as I thought before, when we see such things, you wanna look for these lows to get taken and closed below. The same thing here. Accumulated, dropped down lower, didn't take unfortunately this low, but then we have this order block, we have sweep, we have top of the zone, we have imbalance, so this is high probability order block. We have volume imbalance inside. I'm gonna cover it and all other not really essential PD arrays in next lessons, but for now I'm gonna teach everything that can make you profitable, very fast. As you can see here, you could think that this is accumulation, manipulation down to the zone. You would enter here and then get stuffed out. So you got to be careful with it. We were in a premium, so buying before we reach the discount is irrational. Now let's get to premium and discount. So now we're gonna talk about premium and discount and optimal trade entry. As in this example, we discovered why this long didn't work, because this was in premium, because it was above equilibrium, midpoint of that range. Once it dropped down to optimal trade entry range, you could align this 705 level with some zone, and because this overlapped, you could have entered here and target these equal highs, because smooth edges tend to get jagged. Here we can see fail to close zone, big displacement. You mark it out that way. As you can see, 705 level was the most beneficial level to enter. Also we have this QS down here, internal sweep up here, and 50% tap, so many things have aligned here, and we obviously drop down lower. As you can see, yes, we didn't tap optimal trade entry, but we traded above equilibrium, so we entered premium, and you could take 1-to-1 off of the zone. Here, optimal trade entry almost have failed, but with optimal trade entry, your stop needs to be above this level, and then it eventually got lower. But if you tried to use zones, this fail to close zone was the correct one. Here, if you got bullish after this consolidation, you mark out this range, you can see top of optimal trade entry level. Also, this candle that swept this low, so this order block is responsible for taking out this low, and as you can see, we almost reached it. But if you would use a wick, because we have an imbalance inside it, you would have got an entry and also potential partial entry or pyramid entry using this hidden SND, but I would never recommend to do that because it could have been a sweep, internal sweep here, and you would just get a bad second entry. So that's basically it for this video. Not much information, but still very useful. So see you in the next lessons. Be safe.